All right, welcome to Talkin Investing. I'm Tom, and as always, this is not financial advice. Today, I want to do an update on earnings week. I'm going to talk specifically about Meta or Facebook, which reported last night and is having a very bad day today. We've already had Microsoft and Google report. And today, after the bell, we're going to have Apple and Amazon. So Apple is the biggest company in the United States. Amazon by market cap is the fourth biggest company in the United States. So far this week, big tech has been taken out. So I want to look at what's going on. I specifically want to follow up on Meta. I did do a video on Meta earlier, so I want to follow up on that and see what's going on today. So we'll get through all of that, and I want to look at the Nasdaq as well. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, it helps the channel out a lot, and I really appreciate it. Lastly, if you want to join the channel, you can become a member by hitting the join button on the YouTube page. So if you don't see a join button, you can hit the link below. There's additional member-only content, and also once a week we have a members-only live stream, so we'd love to have you there. Okay, let's talk about big tech. I'm going to start with Meta, since they reported after hours yesterday, and they are the catastrophe of the day today. So Meta is now trading at $100 as I'm making this video. That's down 22.77%. We're going to go look at the chart. That is a multi-year low. So this stock has been crashing for quite some time. Today is just a continued progression of this decline in this stock. Okay, so Meta's market cap is currently at $269 billion. So that still leaves them as one of the larger companies in the United States. Prior to today's crash, they were still the 12th or 13th largest company in the United States. They were once the 5th largest company in the United States. They're one of only 6 companies that has ever traded with over $1 trillion market cap. So I want to just show you this article real quick from Bloomberg. Meta's $677 billion route boosts it out of the world's top 20 stocks. So to put that in perspective, that's $677 billion this year. This is one of the most catastrophic falls in a stock in the history of the stock market. So if we just look at this from a top side, their earnings per share came in at $1.64. The market was expecting $1.87, so that is a miss. Right now, companies that are missing on earnings, particularly big tech companies, are getting beat up. So, okay, I expect them to get a little beat up on this. That is not why they are down so catastrophically today. This metaverse segment that they have is losing billions and billions of dollars per quarter. So people are getting concerned, whereas the rest of big tech and really the rest of the market is scaling back. They're scaling back on their employees. They're scaling back on their marketing. They're taking cost-cutting efforts to get through these difficult times. Meta is still ramping up. The investment community is clearly not in the mood to invest 10 or 20 or $50 billion into a technology that's not here yet, at a time when we're moving into a recession and everybody else is doing the exact opposite. So I think we can continue to expect this company to face pressure from an investment standpoint. Just to go through some of their big tech companies, then I want to look at a couple of charts. So Google's down 1.5% today, and that's after it had a big down day yesterday. So that trend continues. And again, the Nasdaq is the outlier. It is down on the day when everything else is kind of sideways or up. Google reported their earnings on Tuesday, and it was a miss. Okay, same thing. Microsoft is down 1.8% today. They had a big down day yesterday. This was one of the last groups to get taken out. And yes, they're already down quite a bit. As you can see, these two are at their 52-week lows. We're going to look at Meta. It's down substantially worse than that. So the other two worth looking at, after hours today, we are going to get earnings from Apple. Apple's at $146. Its 52-week low is $129. So they're really not at their 52-week low. I actually expect a good report from Apple, so maybe I'll be surprised, but it seems like things are still going well for them. They are a juggernaut. This is the largest market cap company in the United States. So we'll have to see how these earnings come in. I'm not expecting negativity. However, the market is scrutinizing every word these guys are saying. So if there's any part of the fourth quarter forecast that is negative, they could potentially hit this stock as well. Lastly, Amazon is reporting after hours. So they're trading at $111. $101 is their 52-week low. So they still have a ways to go before they take out their 52-week low. But I am afraid this is the exact type of move that Google and Microsoft made on Tuesday after hours when they announced earnings. So if Amazon has anything bad to say at all, if they miss on earnings or they downplay their fourth quarter earnings in any way, there's the potential that they could go hit their 52-week low. That seems to be the trend this week. So after hours today, we're going to see, and then that really pretty much ends the big tech earnings. First, I want to take a quick look at Meta stock, just to put in perspective how far this stock is down. This is Meta on the 1 month time frame. So each one of these candles represents 1 month. month. This green candle right here is from January of 2016. So that's how far back you have to go. This is basically at a 7-year low. So anytime you get these stocks at a multiple year low, there's just no telling where the floor is. So maybe they'll find support somewhere around 100. They're at $101 right now. So that could be a potential line of support. But if we go below 100, this is already a 7-year low. There's really no indication as to where the next stop is or the final stop is on the way down here for Meta. The Nasdaq, along with all the indexes, flash crashed on the CPI data a couple of weeks ago. So that was a new low for all of these indexes. It has had a recovery from then. And now, obviously, this week we're having some down days based on these earnings. So what I want to take a look at is basically it would be another 7% move to the downside for them to retest those lows from the day that they reported CPI data 2 weeks ago. So I just feel like this is a very distinct possibility. So far investors have reacted negatively to every single one of these earnings reports. We have the last two giants coming out after hours today. So if they don't have good things to say, we could see over the next few days or a week this 7% pullback retest those lows. Now, obviously, we could even go lower than that for all I know. That's all I'm looking for is the potential to maybe retest these lows, have a double bottom. So there is some potential downside ahead. Obviously, if the market can turn and get out of this funk, there's a lot of upside from there. But at the moment, the pressure is clearly downward. People are reacting negatively to each and every earnings report from big tech this week. So Meta or Facebook was yesterday's casualty. Today we have Apple and Amazon, and that's going to round it out. So at the beginning of the week, that's what I talked about. I did a video and said we need to get through those 5 earnings reports. Even if you're not investing in these stocks, it is important to understand what's happening with them because it dictates very much what's happening with the stock market, particularly these giant tech companies really dictate the overall movement of the Nasdaq. So that's my update on both Meta and this week's earnings calls, as well as just the overall big tech and the Nasdaq. So everybody be careful investing, and we'll see what happens after hours in these earnings reports. So if you made it this far, remember to subscribe to the channel and hit the notification bell. Thanks so much for watching, and we will see you in the next video.